All right. Hey, Olivia, how are you? What's going on, everybody on Google Meet? Hope everybody's well. Welcome, welcome. All right. Getting scratches. I'm not sure. Okay. It always looks grainy on Google Meet. Zoom be doing something to their cameras to make them much more clear. Very appreciative of that. All right. So tonight, guys, welcome to Lions Wall Street Trading School. Tonight, we will be covering trading psychology. In a nutshell, one of the things that I talk about with trading and having an investor's mindset over being having a retail trader's mindset is we're talking about your position in the market. One of the big things you need to focus on when you're looking for your position in the market is your psychology before you enter the market. It's the first thing you want to do. It's the first thing you want to check in on. Whenever a pilot goes to take off, he's checking all his instruments, making sure they're centered and calibrated right. And you want to do the same thing with yourself. It's almost like a personal diagnostic of where you are at in the day. All right, so we're going to cover a few things. I'll probably have some slides for you guys tomorrow just to get a little deeper into it, but I want to give you guys at least a general synopsis of some of the things that might go on while you're trading. It's super important that you build yourself through this process. It's one of those things where the more you realize that life is inside of trading and inside these markets, the more you're like, okay, you start to make sense of things a little bit different. But it's about you finding your triggers. It's about you understanding your triggers and knowing how to maneuver when you're inside of a trade, because there's a lot more than just looking at numbers on the screen. It's looking within and making sure you're centered first. All right. So I got a few subjects to kind of talk about, but the first one I kind of wanted to talk to you guys about, like I said, these different sessions that you're having with me on Lions Wall Street Trading School. There are going to be a number of classes where I kind of just let you guys, ask me questions, mentor Q&A. This is one of those sessions as well. If you ever have a question about trading psychology, the charts, everything from account setups to, your broker, whatever you need, I'm here for you guys. So just understand, as you begin to make more trades, you're going to see more things about you. As soon as you start to pull that trigger, you're going to start pulling the trigger and pulling the trigger and pulling the trigger on these trades entering the market. And you want to make sure that you feel comfortable. Make sure all your instruments are checked and collaborated before you take off, right? So before we get into anything else, if we have any questions right now, this is the time to ask, and I'll try to tie it in with some real life examples as we're kind of going through it. So I will be sharing my screen a little bit, but to try to find you guys some tangible examples and work with me on that one, because this is something I'm trying and experiment with you guys. All right. So nonetheless, no questions right now. All right, cool. So we're here for it. So understanding your triggers is the first thing I wanted you guys to talk about. Because in a nutshell, what triggers you in life will trigger you in the markets. It's simple and plain. If you had a bad day, your boss yelling at you, breathing down your neck, you feel like you've been, in a discerning phase, something that you might need to just address that you haven't addressed outside of the markets, you will find that you will address that in the market somehow, some way. It will come out. And it's up to you to kind of gauge yourself when you see these things, because this is one of the main reasons why you want to go ahead and start in your demo account. Because when you start to see things happen, you might see it spike up $150, and then it might spike down $250, right? And so in a nutshell, just seeing that spike of you having that much money, it's an emotional roller coaster. And that emotional roller coaster has certain endorphins and certain things, a brain, neuro linguistic programming attached to those things. And you really need to be able to decipher what is going on with you within when you're looking into these markets, making sure you're not looking for extra opportunities. If it's not there, don't force it. You might be forcing a relationship or something. If it's not there, don't force it. You might be you might be in the wrong room. You might not even need to be in the market right now, right? So in real life, you feel like you don't belong or something like that, right? In the market, that'll translate to, you might feel like you're in the right trade, or you might be in the right trade and you might exit that trade prematurely. You see what I'm saying? So there's certain ways that that was super, just a random off the cuff example, but I do want you guys to understand that's how it can stretch out into the markets. You want to be able to take care of your personal development within the market. So if you're looking for it to become your lifestyle, obviously, this is what I do full time. I do other things full time too. I guess I do a lot of things full time, but in a nutshell, it's the fact that you can start off part time, but if you're looking to make this a professional aspect, you got to take out all the emotions, because I know I'm not talking to everyone. Everyone's not looking to become a professional trader. Everybody's not looking to build a trading empire. If you're just looking to get a few $100s, just having a stable way to bring in some money, this is definitely that for you. But if you're looking to grow an empire and you want to have multiple trading accounts where you're trading gold over here, indices over here, indexes over here, if you really want to set it up for yourself, this is what you should be looking forward to. So even before that, understanding your triggers is understanding your goals as well, because your triggers and your goals should be directly related. Triggers aren't bad. People, we can take a step back from that. Triggers aren't bad. It's what happens after you get triggered and what you do with that information, whether it becomes a good or bad thing, or positive or a negative thing, right? And so the triggers that you will notice within yourself, you want to see how it relates. Double check yourself, look in the mirror, go, rinse some cold water on your face, do what you have to do to get back into the game. And if it's not the day for you, it's not the day for you. I cannot tell you how many times I went and traded knowing I was having a bad day, and I traded anyway. And I'm talking about I've blown accounts in a day, just from being in a bad mood, not really caring about the trade because I got other things going on. It's not where you want to be. This is one of those industries where there is no one really against you except for you. You're directly trading with money, so it's whatever relationship you have with money is what's going to correlate when you start to make more money in trading. Okay, so I want you guys to understand that. I hope that makes sense. If you guys have any questions on that or anything that you can think of, I'm here for you guys. All right. Also, fear of missing out and how to deal with it, right? When I say fear of missing out, I'm talking about fear on missing out on trades. Obviously, you'll be waiting patiently for a certain signal in the market, and then you see that one signal, and then all of a sudden you hesitate for whatever reason. You know you're supposed to pull the trigger, but you hesitate, and when you hesitate, it shoots up on you and goes the exact way that you thought it was going to go. Right? It goes all the way up, and now you're ecstatic, but you're not in the trade, right? Because you never pulled the trigger, right? And so don't ever enter a trade because it does that shoot off. Because what happens a lot of times, like, yeah, that might be a one-off, right? And because the market only trends about 5% of the time, market's not always going up and up and up, right? It's going up and down and up and down. The only time it's up and up and up is about 5% of the time. And so if you're depending on that kind of rush, that's a super huge tip that I was not aware of when I very first started trading, and it's how you get your head busted in real quick. You got me? So in a nutshell, getting into the market should be a patient thing, right? But when you see your sign, when it's time for you to strike, you have to pull that trigger and you have to enter the market. Don't be scared of what might happen, or don't be scared of you might be missing out. You see the signals, you had your 3 to 5 confluences, right? The three to five confirmations saying that, hey, this is an area of confluence. It's making sense. You're entering the market. I'm gonna pull up my screen now, and we're gonna give an area of that just so I can at least give you guys one example of what I'm talking about. All right, let's go to a completely different market I haven't marked up yet. All right, boom. Okay. So something like this. Something like this. See, that's a good enough. That's a good enough. All right, let's say you're in for a sell right now. Actually, scratch that. Let's go into for buys, because if I'm talking to my Lions Wall Street students, we're looking more for buy trades, right? All right, so boom. Nope, that's still not good enough. So I got to find a good example. Give me 1 second, guys. 1 second. Okay. All right, that works. Okay, cool. Now, trading psychology, right? So the market's coming along here, and you're starting to notice that this is where it normally happens right here. You see your signal, obviously you have your strong move into a support. I'm sure the support is there somewhere, and now you get this doji candle right here saying that maybe you should enter the market. Now, if you don't pull the trigger right here, because if that's your trading plan, if that's where you get in at, as soon as that candle closes and that's what you go for, then that's what you go for. But I'm not giving you guys strategy right now. I just want you guys to get the psychology of feeling like you're going to miss out on a trade. And so in a nutshell, going here, If price goes here and you still haven't gotten in, now you feel even more pressure to get in, and now you're going against your trading plan, going against your trading plans. Now it's here, and now it's here, and then now it's here, and you still haven't gotten in a whole 2 hours later. Don't be the person to not execute your 20 pip move because you just like, okay, I'm just gonna get in and see what happens and write it up from here. Because you'll expect 20 pips up here, which already happened and it missed you, but because of fear of missing out, you entered the market too soon and then it dropped on you. You got me? And then now you're like, man, that was a horrible idea because you got in up too early or you got in too late. And then now it takes off without you because you closed out right here. Does that I hope that makes sense to you guys. Little by little, you'll see how every single candlestick is telling a piece of the story of what is going on in the market. It's not one of those things you have to guess. It's clear as day. It's just you being able to interpret what you're looking at, what you're seeing, and understanding how the time frames go in hand with your lifestyle and your trading psychology. All right, so that's where we're at on that. So I feel like that was the example I wanted to give you guys. Being anxious to rush into trades, it also defeats your disciplines, right? If you start building up trading disciplines every time that you know, do the opposite of what you're looking to accomplish, you're setting your triggers up wrong. You want to have the triggers that as soon as you see a single signal or as soon as you see a signal that meets your trading plan, you're entering the market. You got me? That's what you want to think about when it comes to trading psychology and really preparing yourself mentally. Every time you see that signal, you take the trade, not because that you feel like it's going to go up or not. You take the trade because it's part of your trading plan, and you told yourself at the beginning of this trading session you were going to make sure that you took the trades that you saw match your trading plan. All right, so just keep that in mind. Stick to your trading plan. All right, and if you don't have a trading plan, you guys know where to find me. Info at lionheartmotivationfactory.com. And if this is completely foreign to you, your first time watching a trading video or a trading psychology video, DM me, comment. I will reach out to you and help you out as best as I can. All right. Other than that, you can go to lionswallstreet.com. All right. So, lastly, now going to the back to that, if I was to go back to that same example, when price got all the way up and you already missed the move that you were looking to get into, you have to learn to let go. You have to learn to let go. When something takes off without you, or when you enter the markets or before you enter the markets, you hesitate for whatever reason, and then all of a sudden it starts building up more and more anxiety. The more you see it go up, and you're not in the market, and you're not in the market, right? You gotta learn to let that go. Just look for the next best trade. So either move on to I tangibly suggest you move on to the next market, go find another opportunity, uh get up, take a break, walk away. If that's the only pair that you're trading, that's the only pair you feel comfortable with, right? You have to have options for yourself to deal with your triggers. You don't want to revenge trade, and you don't want to enter the market prematurely and then end up losing more money than you should have had to. Because what I see a lot with students when I'm critiquing when they're entering the market, it's because it's an emotional decision and not a trading plan based decision. All right. So lastly, let's say you did enter the market, right? Let's say you did enter the market, and on an example where market shot up and then you entered way too late and then it shot down on you. Maybe you're in right here, but you entered right here, but now you're right here, right? If that was to happen to you, you have to stay focused when you're losing. All right. Staying focused when you're losing is vital, because just because something went off without you, this is an extreme example of what I mean by you want to be an investor, not a retail trader. You want to, that's the mindset you want to have. You want to have an investor's mindset. An investor's mindset is worried about position. Did you get good position? You might be losing in the battle right now. You might be losing in the trade, right? You might be experiencing some drawdown, but it doesn't mean that you shouldn't be getting into the market again after. You want to look at it as a better discount. You want to go to the next best trade. So you got to stay focused when you are losing and when you are suffering from drawdown, and it might be getting close to your stop loss, right? You don't want to prematurely exit just because, oh, well, it's probably going to hit there anyway, and I just stopped myself from saving money. But what if it didn't? Right? What if that was all you needed? Just all you let it hit you let it just barely get to your stop loss, and then just start taking off on you. You got me? And you have to play all your trades out. You got me? If your plan is to get in for a 15-minute trade, be in for a 15-minute trade. If your plan is to be in for a 1 hour trade, be in a 1 hour for the trade. And I'm not saying that you can't, go back and forth and have some variety in how you trade, because that's clearly what I do. That's literally what a discretionary price action trader is, right? We're just focusing on the market, what's going on, and what moves can be made, even if it's consolidation. You got me? So nonetheless, let me see where gold is right now, because I am in some trade. Oh yes, that's what I needed to see. All right, we got a little boost. All right, we're good to go. Headed in the right directions. At least right now, we'll see what happens. But nonetheless, staying focused when you're losing is super important. Losing doesn't make you a loser. All right, not in this game. It means you're learning. You're paying for experience, right? You're paying for experience, and this is also why you want to start in the demo account, because I say like this: if you can get 20 pips a day consistently for about 30 days, that would definitely show. Not even consistently, because every day that's not even realistic. I'll be honest with you. You're gonna have a few days. That's another thing I can talk about with trading psychology. You will have days, no matter what, where it seems like every single trade is going to get you, right? So I want you guys to understand: losing does not make you a loser. It can just be a phase that you're going through. Maybe you're not seeing the market correctly. That's when you have to understand you got to get up, remove yourself from the market, and walk away. Go for a walk. At least go do some exercise. Change something up so your brain is associating with something positive. That's the real goal. So whether it's you going to do some artwork, this is where you take your time away from the markets, or away from just trading in general for just a moment, momentarily. It's okay. It's part of the process. You have to learn to take breaks and get back to it. Just don't quit, don't give up, because this is that one thing that will change your life, and you'll be able to grow as all the money that you want possible once you get to a certain level. You got me? And there's so many different aspects to it. This is one phase of trading. This is one type of trading that I teach with Forex. So many different others. There's options, there's futures, there's a lot of different ways to get into the digital game. The method is definitely digital. All right. So nonetheless, I'm here for you guys. We got about 15 minutes, or a little bit less than 15 minutes. I wanted to answer some questions. If I don't have any questions, I can kind of go into some trading maybe, but I was hoping I at least had one question, two questions that I could help you guys out with. And if not, just if you watch this video later, let me I think I'm supposed to. Yeah, and if you guys end up having some questions later you can't quite think of now, or if you don't feel quite comfortable talking on camera, you can also type it in the comments. You got me? I know there's a lot of different ways people like to communicate, or if you just want to write me DMs, that's fine. I'm here for it all. You guys need anything from me, you know where to find me. But other than that, kind of getting into the market. I am in from a trade of 29.01. I have like two trades placed at 29.01 right now for gold US dollar for buys. So I'm suffering from drawdown currently. So nonetheless, it's never something that you are never going to experience. There are going to be trades that you lose. This hasn't been a trade that I've been wanting to close. I do my best, and I always make sure I stay within my 0.15 or whatever my account size is, right? Depending on the account size that I'm using. If I'm like, for today, I started the 30-day run for the scaling process, and I started at with the account size, and I'm starting with for this client's account. I'm making sure that I get 20 pips a day at 0.15, and so I scale up to another level on the pay scale. So I know to move up my account size as it's positioned to how much I have in my full trading account for that client, right? And so in a nutshell, all you want to think about is that you're incrementally going from 0.15, 0.16, 0.17, 0.18 on your lot sizes, but you're getting nothing but 20 pips. All you're doing is stacking 20 pips. You guys have seen how gold has moved. In a week, gold moves from, on average, in a week, on a volatile week, 25.68 to 27.15. That's almost about 100 plus pips, right? And so ideally, by the end of the week, you have 100 pips. If you can consistently get 100 pips as you're scaling up your lot sizes, it's not going to be too long before you really understand how powerful this is for you. And I'm gonna go to let me find this email for you guys real quick. Give me 1 second. I want to find this email for you guys so I can show you. I haven't sent it out to my Lions Wall Street trading students yet, but it's mainly because I'm editing it for beginning traders as well. You got me? Because I know I teach most of you guys to trade with the point zero one, right? 0.01. But there's also a level of when you see certain times in the market where you know when you start to learn more. Level two of kind of getting to the money is upping your lot sizes. And I want you guys to understand the psychology of that as well too. It's super important to talk about because as you start to see that, hey, the same exact efforts that once took you 15 minutes and you only made $10 or $20, right? Now you're making $600. Now you're making $1,000. Now you're making $2,500 in those same 20 pips during the day. You see what I'm saying? And that's what this is for you. So I'm gonna pull up this email and I want you guys to see this one more time because it goes with you guys' trading goals. Like I need you guys to understand that trading plan should be meeting your trading goals. What are your goals? Right? Is it based around your freedom? Is it based around who you love in life? Is it based around the fact that you want to go on a vacation? Why are you trading? Why do you really? What's the point of you learning how to trade? What's the point of you really getting in these markets and taking time out of your day to make this work for yourself? You know, you really got to think about that. One second, but I want you guys to at least vividly see how 20 pips is all you need, and this is a brick by brick process. This is yep, perfect. All right, I'm gonna share this. I think I shared this last week. Second, I don't know how to. There we go. This over. What happened? I don't know what happened. All right, all good. I think I have to leave that up. Second. But this is what I want you guys to look at for just a moment. Bam. All right. Nope, not that one. There we go. All right. Cool. So if you guys can see my screen right now, well, these Zoom features out the way. Goodness gracious, Zoom features stay. It's like they know the Zoom features know where to be. They just get in your nerves. All right. So yeah, 20 pips. All we're looking for is 20 pips, right? This is a trading growth plan. I'm not even supposed to be showing this to you guys. Like this is something very valuable. This is all you need to be able to do to be able to scale at an exponential rate. But I'm glad that the people who are on. So once you guys understand this, it's not about whew, here should have what? No, that's not me. Nope. Nope, I don't think so. Okay. All right. Give me a heart attack. Whew. Anyway, so in a nutshell, over here, that super just threw me off. Nobody normally is in here this late. Goodness gracious. All right. Where was that? So trading growth plan used for the following periods, but nonetheless, this is something that you guys can use to really help yourself out. So day one, right? Monday, day one. If you're starting on a Monday morning, fresh morning, beginning of the day, great way to start your trading process. Keep in mind, these first 30 days are trading days. I want to say there's about 21 trading days, I want to say, in most months, right? But nonetheless, if you can stick to this, whether if you trade Monday, Tuesday, Wednesday only, just start over and go to Monday. If you only trade Monday, Tuesday, Wednesdays, you got me? So if that's your day, then day 4 would be your Monday of the next week. You got me? Nonetheless, 20 pips. So after about, let's say 10 pips, right? 10 pips. But I just want you hold on. Let me break this down so you guys understand what you're looking at. All right. So 0.01, 20 pips. That's $20. That's day one, right? You got $20 in your pocket that you did good. You placed the right trade. You got your 20 pips in for the day. Now we go to 0.02, right? 20 pips. That's $40, right? $40. Now you have $60, right? Next day, 0.03. You're exponentially growing and you're using your profits versus using your actual account. And there's basically account management within this plan so that as long as you have a decent amount, of course, you're going to take some drawdown in some of your trades, but you want to be able to risk just as much as you're looking to go. So if you're only looking to get $20 for the day, you should only be looking to risk $20 for the day. You got me? So if you're only looking to get $40 for the day, you should only be looking to risk $40 for the day. And the more you're able to risk, obviously, you're able to increase your lot size, right? So if we scroll down, I hope you guys get the point from that. But if you scroll down and let's say we go to 0.15, this is 0.15 for the day. Now per account, you're looking at $300 for a day, right? But this is after 15 days, you could have $2,380 in your account following the same methodology, right? All right. So this is what I want you guys to focus on: placing your trading goals in front of you. At the end of this 31 days, at the end of this 31 days, you would have $6,900, right? If you follow this 30 trading plans, 30 trading days, that is 30 trading days. So that might stretch out to about a month and a half, right? But what could you do with an extra $6,900? One of the things I want to tell you guys about, and why I'm saying that you want to understand the psychology, because you don't want to just take out all 6,900. Now you got to start from scratch. No, you pay yourself per percentage. I worked it in so there's about 25% profits that you're taking out every 30 trading days. You got me? So technically your pay for that week, or for that month rather, excuse me, for that month is $2,380, right? But if that's the extra money and you still have 6,900 that you're working with into the next trading plan, you do the exact same thing, but you scale it back. So at the end of this, you end up at 0.30 at the end of these first trading days. When you get the trading plan or phase B in the second day of 30 trading days, now you're at a different level. You got me? This is what I want you guys to be working towards. This is where I need you guys' mindset to be seeing what is possible for yourself, and visualizing vividly that you can do this for yourself. All right. This is the power of Lions Wall Street. But nonetheless, we're gonna go ahead and chalk this up as the end of the class. If there's no questions, if you do have any questions about anything that you saw today, all you have to do is reach out at info@lionheartmotivationfactory.com. If you have some feedback for me and want to talk to me personally, we have our corporate line. It's 833-563-4763. All right. And also, and obviously this is lionswallstreet.com. Check us out. Click on this schedule to set up your trading account link here, and it will take you to basically how to set up your account with me. And pick a time and a date that works for both of us. Right now, I have the 22nd available Saturday. All right, so I mainly do all training or setup days on Saturdays. So that's the day when I sign people up. If you have any questions, give me a call. If you need personal training with your coaching, I do offer that as well too. It is at a discounted rate right now. I want everybody to get in the game. I'm not trying to hit everybody upside the head. It's $250. So I want to make sure you understand what you can do with that. But in a nutshell, $250 is personal time with me. I go over, you have to have some trades. I'm not gonna take $250 from you if you haven't started placing trades. You have to place at least 100 trades, and then I can actually critique you on what you're doing so your next 100 trades can be more profitable. All right. So that's what that is. But in a nutshell, all the options that you need are right here for yourself. Go ahead and, whether you want to sign up for a monthly membership, get some one-on-one trading, or just want to register for the class, this is where to find us. Monday through Friday, we trade 9 a.m. It doesn't always mean I'm going to take a trade. It just means I'm going to get in the market. I'm going to mark some things up. And if I feel something that matches my trading plan, I'm going to go for it. I always give suggestions, and when I'm giving out trading signals, that's more likely a trade that I'm taking personally, if I ever give out a signal. But if you don't get a signal from me for the day, it's because I'm staying out the market, or I'm choosing to basically stick to my trading plan. It might not even be me choosing to stay out the market. If it doesn't fit my trading plan and the opportunity doesn't arrive for the day, I don't stay on it. I move on to the next best trade. All right. But that's the main thing I want you guys to take from the day. If you have any questions, or if you want to pick my brain, feel free to click the link. Nonetheless, we're here for it. Suze Orman said the key to money is to stay invested, and you got to keep investing your time. You got to keep investing and reinvesting your focus to build this up for yourself. It is worth it. I will tell you that. It ain't easy, but it's definitely worth it, and it's here for you. All right, Queens and Kings. So give me a call, give me a text, however you reach me. Reach out, email. I'm here for you guys. But I'm gonna go ahead and log off. If you need anything from me, you know where to find me. All right, you guys take care. Have a good night.